Any one of you, please come and present your paper. Next, another one is P. Harshavardhan Reddy, Niketan Institute of Management, is going to present a paper on insider trading, the role of regulators, some evidences from India.
Respected dignitaries on the dais, my dear student friends, a very good evening to all of you. Today I'd like to give a small presentation on insider trading, role of regulators, some evidences from India. My dear friend, uploaded, sir. Dr. CVR. Field. It is easier to identify the beneficiary of insider trading, but the extent of loss occurred is possible to calculate because of the non-discovery of data with respect to insider trading activities, which are illegal in nature. So what the earlier research is saying about insider trading, it's a very interesting slide. When executives bought shares in their own companies, the stock tended to outperform the total market by 8.98 to 9% over the next 12 months. Quite opposite to that, when insiders have sold the shares, the stock underperformed the market by 5.4%. Is a research study conducted at Michigan University. The other research study has clearly revealed that insider trading is significantly correlated with stock price runs, implying the insider trades affect the price discovery differently than non-insider trades. The other study has clearly saying that a positive relationship has been observed between insider transactions and future stock returns. So this has been an information to me to take up this concept for my study. If you look about this particular slide, in continuation of the earlier SARS presentation, there are 3 lines with one straight line indicating the average performance of the market over a period of some time, which we have data about 4 parameters. One is the 5-day moving average, the other one 20-day moving average, then average insider trading buy and sell ratios, then NASDAQ performance. See, insider when buy sell ratio is clearly revealing that when the overall market is low, most of the insiders have bought the shares. When the overall market is high, insiders have sold the shares. So the sell buy ratio has been clearly indicating the relationship between the trade that took place in the NASDAQ and the insider trading transactions happened there. So what regulatory mechanism in India, we all know very well about it. I don't want to stress once again about it. So I'd like to focus on 1 or 2 case studies which were happened recently in our state also. A Hyderabad-based Polred technologies were found by SEBI, which has penalized with a fine of 2.2 crores. So how the fraud took place in between the insiders and how they transformed the information about the unpublished price-sensitive information to the people outside to perform unscrupulous tradings in the stock market. So this is what relationship that between the information flow between people relating to that company. The next slide shows about, if you look about this slide, at what price people have bought due to unpublished price sensitive information and how ultimately they got profit. So ultimately if you look about the extreme right bottom of the table, they got a profit of 1.65 crores ultimately. Then SEBI has penalized this company, the insiders of this company, 1.65 crores plus the interest on the profit they gained from the date of transaction to the date of punishment by the SEBI. So total penalty is about 2.2 crores. So these few more cases with respect to the overseas countries, international judgments by US Security Exchange Council in between US Securities Exchange Council versus Timothy J. Porter and George T. Porter is a case about buying of call put options with, due to insider information. At the bottom of the slide, another case is there, US Security Exchange Council versus Alfred S. Teo and others. In both these cases, the Security Exchange Council has been penalized the people who have performed the insider trading due to false information. So this is about some of the shortcomings in Indian regulatory system with respect to monitoring and regulating the insider trading. It has been proved in two cases especially. One case is about Samir C. Arora versus SEBI. Another case is about Rakesh Agarwal versus SEBI. In these two cases, SEBI has failed to prove the sufficient grounds. Therefore, though initially SEBI has punished them by paying a huge penalty to the investors education and protection fund worth 34 lakhs, 17 lakhs to BSE, 17 lakhs to NSE, and ultimately they approached the securities appellate tribunal, and they were under the appellate tribunal, the SEBI has failed to prove the sufficient grounds. Therefore, people have escaped from the case. This is, I can say, loophole with the SEBI. With that only, the SEBI has modified its regulations from 1990 to 2002. So to conclude, knowledge and vision into the future are the key in making smart investment decisions. The insiders possesses the knowledge and the vision. So they are the ones who makes corporate decisions and business plans, and therefore are the ones you must pay close attention to, because if the insiders are very judicious in nature. To suggest the act of insider trading is a serious crime that we all know very well. Before attempting to trade securities based on information that is not publicly available, one should be aware about the consequences for doing so. One could possibly spend up their 25 years of life to prison, and chance of getting caught are a lot higher than one who would get benefit out of it. Thank you very much for the opportunity.
Thank you, Vishwanath Reddy garu. Now I invite Dr. Vinita Sharma. Dr. Vinita Sharma. She is coming.
A very good afternoon. My paper is on a review of major issues and trends in insider trading regulations of leading global financial markets. I'll quickly review to next, please. Yeah. Okay, the methodologies. I've only picked 5 countries because I've taken only those countries which had a market capitalization of greater than $2 trillion. That gave me a sample of 5: United States, China, Japan, United Kingdom, and India. I have just mentioned the main points. If you look, the years is very important in which they have started regulation. US has the oldest one, followed by UK. The other 3 are relatively new: China, India, and Japan. I'll just quickly review the main findings, starting with the US. Here. Okay, starting with US, the original act still holds. That is the 1934, which is amazing. That is largely because they have given a broad outline and left it to the regulatory and the court to evolve the rules and regulations. If we see, okay, how has it evolved? Am I audible otherwise? Without the mic, am I audible? Okay. What I have done is covered the way and methods in which each has evolved and what are the major issues. Coming to the US one, the Rule 10B of the Act, of the original Act. Very interestingly, it covered only the purchases of securities. It did not cover sale. So SEC, their regulatory body. Though now they consider it's a serious crime, it's largely preventive, and even their regulatory body cannot, it just gives the recommendations to the higher ups. It has no enforcement powers. Second trend which has emerged is sharing the responsibility of regulation. All the market participants are being made responsible through tools like suspicions, transaction order report, FCS whistleblower. So even the participants are responsible for regulating themselves. The rule making in SEC, if we see, the rule itself is put up for public, people give comments, and so this is going to become a trend of the future. The other trend is harmonization of insider trading regulations. EU has set a precedence. For all member states, has come up with a common insider trading the only solution, as insider trading can never be eliminated, as it was mentioned by Murali Krishna sir yesterday. Greed, human greed, we cannot avoid, so insider trading is going to be there. All we have to do is outwit them. And if you see, times are changing. Twitter and Facebook evidences are also being used for evidence, as we saw in this Fraudulent technology case that the previous speaker just mentioned. So on this, I'll sum up.